What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you're in the market and not trying to time the market because that is simply impossible to do. And also, hopefully you're investing into yourselves. You are investing into appreciating assets, that goes up in value over time, like yourself, like the stock market, real estate, anything where you can have your money work for you. Invest into something to, again, include yourself. Higher education, certification, books, just reading, doing your research online, learning different things. Anything that adds value to your lives. All right, so today, let's see what's going on in the news. It says the S&P 500 NASDAQ notched fourth day of gains with next week's Fed meeting in focus. So it says U.S. stocks moved higher on Friday as Wall Street digested a cooling in the Federal Reserve's preferred inflation gauge, increasing the odds that the central bank will cut rates next week. The S&P 500 rose 1.19%, NASDAQ gained 0.3%, and the Dow rose 0.2% following a mixed Thursday session. Yeah, I didn't give a review on yesterday, but I'll talk more about that towards the end. So it says investors continue to bet heavily on a quarter-point interest rate cut from the central bank next Wednesday. Traders are pricing in an 87% odds of a move lower compared with 62% a month ago, according to the CME Watch tool. On Friday, a delayed reading of the PCE price index showed inflation rose about as expected in September. The core PCE index, the Fed's favored price gauge, cooled slightly, rising 2.8% on an annual basis when we want to be around 2%. So meanwhile, U.S. consumer confidence rose for the first time in 5 months as respondents' inflation expectations improved. So the job market, meanwhile, has presented more of a mixed bag of data this week. A Challenger report on Thursday showed U.S. companies cut 71,000 jobs last month, the worst November since 2022. Yet, new weekly jobless claims fell to their lowest since September 2022, reinforcing the picture of a labor market cooling gradually rather than rapidly. I would say just take this into consideration. AI, automation. These companies are bringing them online. These systems are replacing people, right? Not all jobs, but a lot of jobs right now. So just keep that in mind. So meanwhile, news landed that Netflix will buy Warner Brothers Discovered Studios and its streaming unit for $72 billion. Following a week-long bidding war, Netflix stock ticked down while Warner Brothers shares moved 2% higher. So in earnings, Hewlett-Packard stock rose slightly after the server maker's quarterly sales outlook missed high AI-fueled expectations, but the stock still rose. Some companies are just different. And that's it for the news. That's it. So let's see what some stocks did today. So FTEC, an information technology ETF, rose about 98 cents today, closing out at $229.01. Silver, which is a silver ETF, ticker symbol SIVR, rose $1.20 today, closing out at $55.57. I'm also looking at NEAM. It's a gold ETF, but I'm not going to talk about that since I didn't buy it. Bitcoin went down $3,000 today, closing out at $89,000. SPYM rose 13 cents today. That's the S&P 500 ETF, closing out at $80.66. Palantir gained $3.84 today, closing out at $181.76. Tesla rose 52 cents today, closing out at $455 flat. Broadcom gained $9.21 today, closing out at $390.24. Nvidia lost 97 cents today, closing out at $182.41. And that's pretty much it. That's it. Yeah, so again, hopefully you guys are investing. Now, what I was going to talk about, like I said at the end of the video. So my goal starting out the year and doing these YouTube videos, I said to myself, I wanted to do this for the whole year. Now, when I started out, I was like, okay, this is fun. And then towards the middle of the year, I was thinking maybe to make some changes to the video, put out more content. And then I was like, I don't know, because I don't have that many subscribers. And so I was thinking of ways to improve the content to gain more subscribers. But I really just didn't want to put that much effort into it and just stick to what I was doing and just see what happens. And I'm glad that it is the way that it is. I'm glad I did not get an influx of subscribers, because then I will feel the need to do more. So I just kept everything simple, right? And I told myself I wanted to do this for the year. Then I also said to myself, I'll figure things out as I go, but I want to do this for the whole year. And so the whole year is almost here. Now, there were times where I like earlier this year, I had some things that happened in the family where I didn't make any videos because I was away. There might have been a few days here and there where I missed videos, like yesterday. Honestly, I thought about doing videos, but I was doing research and reading, and I just didn't do it, right? Then I reminded myself, oh, this is the end of the year. So, anywho, later on in the month, I'm going on vacation. And so I'm thinking next week, we're probably up until Thursday, will probably be the last videos that I do. And I'm done. I'm not going to do any more. And I'm saying that, not saying that I would not come back to YouTube, but I don't think I'm going to do any more reviews like this anymore. Maybe again, but I just have to focus on some other things, so I'm just gonna stop. I will probably continue, well, not probably, I will continue doing my morning reviews on my own, but I will not make them into videos. And I also wanted to say this, like I said, inflation is around 2.8%, and they want it to be around 2%. So I advise a few of you that do watch these videos to pay close attention to the market. If they do cut rates next week, and then the market goes up, I'll be careful. Be careful with the stocks that you buy. Make sure you do your research if you buy individual stocks. Make sure they have a good balance sheet. They have a lot of money, on hand. Make sure these companies don't have a lot of debt. Diversify your money. That's what I am doing. I'm going to consolidate my portfolio probably while I'm on vacation around the end of this year. To diversify my portfolio even more, like I mentioned, gold. Like, I don't have any gold, and so I probably will buy a gold ETF, because the stuff that I'm reading, it's a mixed bag. So you don't know what's going to happen to the market, if anything. But there's a lot of reports out there that the money that's currently that may get pumped into the market may not be a good thing, with all the debt that the country's in, all the debt that people are in, all of the AI that's coming online and automation. Some of these things may replace people. So I would be a little leery if I were you, if the market just starts going higher and higher within the next couple of months, because there could be like another little reset. And if you're not invested properly, let's say there is a reset, don't just pull all of your money out of the stock market. Because new investors tend to be a little emotional, because I know that I was at first, and I did the same thing. Like in 2022, when the market was doing bad and I panicked and I stopped putting money in the market. I even moved money. It wasn't a good idea. And then later that year, the market started to boom and I missed out on a lot of gains. Anywho, all I'm saying is investing is still like gambling. You're taking a chance, you're rolling the dice, just like your 401k is a gamble. If these companies make one bad decision that your money's invested in, you could lose your 401k. Yes, you can lose your 401k. Remember when these crashes happened, like the 2008 real estate bubble? A lot of people lost a lot of their money in their retirement. Now, had they just left it there, but a lot of people did not, when they lost like 30 to 40, maybe even 50% of their retirement money, they might have pulled it out thinking that they needed to save it, only for the market to shoot back up to all-time highs, and they missed out on those gains where their portfolio could have tripled had they just left the money alone. So just know, if there is like some type of reset next year, like I'm reading reports and listening to videos that talk about the first quarter of next year, look for these signs, these reports that are coming out that affect the market. Bitcoin, it's taking a major hit. So I will say this, the information or the warning signs will be out there if there's some type of reset. And even if there is one, you may just want to leave your money where it is. If it's invested smartly and wisely, if you've done your due diligence, or whomever is investing your money on your behalf, hopefully they have it in good, sound investment. But anywho, I'm just talking because I'm not doing any more videos after next week. That's pretty much it. But it's been fun. It's made me pay attention to a lot of things that I've never paid attention to before. And that's a good thing. So I learned a lot. But yeah, that's it. Yeah, so like, comment, subscribe, share this video. Let me know what you think, if you think anything at all. And disclaimer, I'm not a financial advisor, nor am I pretending to be one. So please consult with a financial advisor before you invest any of your hard-earned money. And also look for my little ebook, little short ebook that I created. The format's not like perfect, but check it out anyways. It's only like $3.99 on Kindle. Kindle. I said Tyndall. Kindle. Yeah. It's called Mind Your Money Business. So check it out. So you guys take care. Have a blessed weekend. Peace. Love you.